Prime XBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Birb. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
Okay, everybody. It's Adrian CryptoBirb speaking in here for another show of 14-Day Free Trading Congress today. This is the very final show. We've been streaming for some time already, and I cannot tell how excited I am to be having this very show. On behalf of my own as a trader, as an investor, as an analyst, as a financial analyst, I could not be happier because today's special guest is a great person whom I always admired, and I'm even more excited that he wanted to contribute to the Congress for you guys, because we have for the guest Douglas Boneparth today. How is it going, Douglas?
Hey guys, how we doing?
Good. Doing very good, and I'm very excited to have you. As I said, for those who actually don't know Douglas, if there are any people like that ever, come on, then Douglas Boneparth is president of Bone Fide Wealth. Bone Fide or Bone Fide?
Bone Fide, you nailed it.
Bone Fide, there you go. CNBC Advisor Council, author of Mill Money FIX, if I'm not mistaken in here, and We Should Be Sleeping podcast. That's what I'm following just from your Twitter bio. Although I'm so 100% sure that there is so much more that you're going to share with us just beyond those projects, your firms, and all the brands that you are part and contributing to. And my question is how it all started for you, how this all financial stuff started.
Yeah. So I grew up in it, actually. So my father's third or maybe fourth career after leaving New York and moving us down as young kids, my brother and I as young kids, into Florida, he kind of fell into wealth management and personal finance. Way back, it was IDS, American Express, and he became a financial advisor and doing financial planning as opposed to just being a broker and trading or selling securities on behalf of clients. Was really just starting to come around. So this is early 90s. You didn't really have comprehensive financial planning before that. And he really liked the idea of being able to provide advice in a very academic or systematized way, and then sell products with it. So, product is still pretty heavy then. You're still selling loaded mutual funds. You're still pretty much taking commissions. The asset-based model wasn't really dominant. So I was around this as a young kid, really. And throughout college, he probably saw I was partying a little too hard. And I came home after my first year of college, and there was a Series 7 manual on my bed. And I had my securities license, at 19. By the end of that summer, I crushed the Series 7, which ironically I no longer have because I'm an RIA. But that's where it all began. Out of a father's fear that his child would become a loser. But no, I got into it, and exam after exam, and then I started to learn the business, and I started to work kind of hand in hand. Working with my dad was very difficult. I would ultimately leave after graduating from college and spending a year with him, moving back home. But 4 years of working directly, I mean, no one's going to teach you better than a parent. No one's going to give you more access to this than like a father would. So I got to see and do more than probably anyone would ever allow me to see and do, given my age and where I was in my career. And that allowed me to take that experience and that knowledge and successfully move to New York City. I mean, you know, you hear it's cliche, I'm moving to New York City, I'm gonna make it there. And that's not an easy thing to do, but I literally packed 4 boxes and bought a mattress, had a random Craigslist roommate, and made a go at it. So that's the origin story. And by the way, this was all this was like October 2008. So you can only imagine what
perfect timing.
Yeah,
perfect timing.
Exactly. Perfect timing to move to New York City and work in finance at the age of 24. Kind of a miracle I survived. But that's the very, very beginning of it. And now, geez, that seems so long ago. That's what, 14 years ago? Jeez.
It really does. It really does, doesn't it? It's actually funny that you're talking, you were talking about that timing thing. It just, there is one of my favorite movies, with Martin Scorsese for Wolf of Wall Street, of course.
Yeah.
Right? So there was this one of the initial scenes with Jordan Belfort, Leo DiCaprio playing this first day on the New York Stock Exchange, right? As far as I'm concerned, and he literally just stepped right in that what we don't want to call bad words, right? But that's how it works, I think. That's how it works. That's what market peaks usually attract many people to actually just do things that they would never do otherwise. And was that the case actually?
I think one of the best things that could have ever happened for my career was stepping into the 2008 and 2009 recession right as I got to New York, because yes, it like literally, if you could make it through that, what's going to take you down after that? Not a lot. And I really think getting to do it at a time in my life where I had far less responsibilities than I do now. I'm a dad of 2 young girls. I have a mortgage, still got student loan debt from education. I mean, the responsibilities to family, community, friends, and my clients and practice and employees, it goes on and on and on and on. But when you're 24, moving to New York on a whim, and your worst case scenario is moving back down to sunny South Florida to go think about your life while the world's kind of burning down around you, isn't really that, bad of a downside when people are literally losing their homes, their shirts, their jobs, and even their lives over just how bad the state of the economy was. So for me, and I think just at a very high level, ask anyone with experience in the markets or trading or in finance in general. They'll tell you that all of your learning, the best learning, either comes from failures or downturns and bad times, because you're going to use them as the learning lessons to thrive in the good times and prepare yourself for the next downturn. And I wholeheartedly believe that. So I think as difficult and, as difficult as it was navigating that time, and on top of it, I don't envy anyone who's 24 or 25. That's not quite the era in my, and it's very personalized, not quite the era in my life I want to go back to. You're like too young to be respected by any adult. You're too old to be considered a kid. Like basically no one respects you. You have everything. You have everything to prove. It's basically puberty all over again, except your body is no longer changing, or at least I hope not. It's not changing all that much. It's just a terribly awkward time. So all of those things kind of came together at this ridiculous intersection of my own personal growth in life and my own professional growth as someone working in finance.
That is actually very, very funny about what you said, that life just plays tricks, right? Life is a meme if you think about it.
It really, yeah. You zig, it zags almost, every single time. And I think it's, if you don't digest the fact or understand the fact that, so the expression is man plans, God laughs, right? And, that's pretty much true. I think you can get ahead of the curve by just kind of expecting that things aren't going to go your way probably the majority of the time. So I think there's probably some comment about just expectations. Life is really about, and certainly the world of investing and what I do for a living and working with individual clients is you're an expectation setter, right? You have to set reasonable expectations for people so that they don't succumb to their emotions, right? And make terrible decisions. And specifically, we're talking about, their money here.
That is very right. Because you speaking of those new trends, full of millennial people as well, millennials. You're the CNBC advisor cancer. You're the author of the just like I said in the beginning, Millennial Money Fix, right?
The Millennial Money Fix, yeah, the book my wife and I wrote almost 3-4 years ago now.
Yeah, could you tell me a little bit more how your path just lined so that you become part of that?
It's a really cool question. I just switched my camera there. Sorry for that.
No worries.
So the book it served a number of things. It was kind of like a business card and a marketing piece first and foremost, but it was also, I wouldn't say first and foremost, that was a big part of it. It was an opportunity that landed in my wife Heather and I's lap. So a real kind of statement piece on where we're older millennials, she's 35, I'm 36, and it was really where we had found ourselves post-recession, carrying multiple six figures in student loan debt. She went to law school. I would then go to business school, take out another six figures on top of her 200,000. So here we were with $300,000+ with student loan debt, well educated, but at the same time, how are you going to overcome that mountain to continue on in your life and do all the great things you want to do, the great things in life, which are, no different than our parents and grandparents, settling down, have a family, buying a house, getting to see the world, travel, all of that stuff. I don't really think that changes from generation to generation, just maybe in the way that we do it or how difficult it is to do those things given the current economic environment and financial realities that we face. But an agent had reached out, or I had reached out to an agent to talk about an opportunity that came my way to collaborate with someone on a financial parenting, what to expect when you're expecting, but for finance. And I was told, don't do that project by a book agent who I was banking the idea off of. And he found something I had written, a white paper about millennials and money. And he said, well, why don't we turn this into a book? This I can sell. This would be great. And I looked over at my wife and I said, so, what do we do? And we had a feeling we were going to write something like this anyways. But this was a great opportunity to figure out how our generation found itself in the situation of bearing that much student loan debt, why the cost of college, at least here in the US, has gone up so much. What was really driving these things? What was, and ultimately then also not only dive into how we got here, but then provide solutions for basically the fix on how we can help people get out of it. So we wrote our own take on getting you from, basically making the decision about college to settling down and marrying, and how to join, bring finances together. So we kind of wrote that chronological guide on how to do that.
That is quite a good story. That sounds like this. But the truth is again that I myself, for being 28 years old right now, I'm really from the financial point of view, I'm building my financial freedom, thanks to crypto and beyond, to other investment assets like I'm a big fan of gold and silver and all the commodities, especially right now, which are really starting to look really, really good, in my opinion. But the truth is that there are so many people who are lost in all that mess. There are so many people who have no idea what is right or wrong anymore. You would hear, all the TV stations just saying many different things about the same topics. They would just literally just confuse you, right? And for you, that's about right. And for you, being a person who's already kind of like been very professional in this space, for you being very professional about your financial advisory and about the Bone Fide Wealth, the management firm. And I really want to ask about who's your clients on a usual basis.
Yeah. So if I had to give you a demographic, you're talking about 28 to 42-year-old hardworking professionals, from entrepreneurs to got a lot of lawyers, a lot of folks in finance, a lot of people in digital media. But it's really the young professional. I built the practice around where I saw a massive hole in the wealth management space. And again, going back to the book and sitting in business school at night, in New York City, looking at, some of everyone around me in that classroom was, there at night, 3 days a week after grinding a job, and they all wanted to get ahead, and they all were dealt the same blow as far as what 2008 and 2009 did. And I was just inspired by the work ethic. And for anyone saying millennials are lazy and entitled, I'm thinking everyone here is busting their butt, to get ahead. Where is this narrative coming from? Like, sorry guys, we have iPhones and remote controls and technology, so our life is easier because we can have all of this stuff at our fingertips. I don't know if that's, okay, there's an argument there. I don't know if that necessarily makes us lazy and entitled. If I play devil's advocate, I obviously can make some arguments as to where older generations are coming from, but I just didn't view that as fact. And I needed to, as a professional, figure out how I was going to grow a business over the next 20 plus 30 plus years, assuming I love what I do. I don't necessarily want to stop unless there's something more fun to do, and I can afford to do that. But they're in basically sitting through business school halfway through as I'm racking my brain around how I'm going to grow a practice, because you have to understand, to this day, wealth management operates around managing assets and charging a fee for doing so. And if you're a young advisor going through any recruitment program or looking to make money, you got to go follow the money. You got to go get assets. So you're not, if you're going back now 7 years, 8 years, when I'm just thinking how I'm going to do this, you're not going to go follow around fellow 27 and 28-year-olds to do that, unless a lot of trust fund kids or entrepreneurs who are absolutely killing it. It's not really a viable model to generate a ton of revenue, although that's very different today. It really is, through financial planning, but not really then. And you got laughed at by any manager at any wealth management firm, any bank. If you told them you wanted to work with millennials and young professionals, you probably were told to go home. You're laughed at and told to go home and think about what you said. And if you can't figure it out, don't bother showing up, the next day. And after seeing 2008 and 9 and what was in front of me in the classroom, I knew it in my body that this was the ticket. This was the long game that I could play in order to grow my business over the next several decades. And I was very fortunate to have, enough clients, wonderful baby boomers and older clients who did have assets to more or less be that seed funding, right? To be able to pay my bills and pay down my student loans and continue to do the things I wanted to do in my life. And there it was. And then the term millennial was just kind of popping up in the press, and no one really liked it, but it wasn't going anywhere. So the marketing side of me, the branding side of me, the financial, it all just came together. Boom, that was it. I'm going to be New York City's financial advisor for millennials and young professionals. And that's a mouthful, but that won all the SEO. That ended up, I ended up stepping in the right, pile, so to speak, because
Yeah.
I could use my PR degree to leverage media relations, because New York City, your local news is everyone's national news. And I just really began to organically get lines in the press because I was doing something unique at the time. There wasn't a lot of folks running the financial advisor for millennials shtick, and I made a name for myself doing that. And then as I was doing that, I really just started to figure it out. Right, you started to figure out how this translates into a digital marketing strategy through social media. You start to realize, well, if I can write a weekly blog for 80 weeks, you see all the winners and what they're doing. Like, okay, well, everyone's writing, like I have to write. So you do that. And that was hard. And all these things start basically coming together. And when you get that email or someone fills out, the contact us for a complimentary consultation part on your website and it turns into a client, that's, I have to say, the coolest day you'll ever have if you're becoming, almost any business person, but it'll be the coolest day certainly as a financial advisor. You did it. Like you did it. You built the machine. Like now you just got to tweak it. Now you got to put on new gears and, figure out how this thing's going to really work. But the fact that, you put something in and out came a client, you literally did the hardest thing in all of wealth management and you did it on your own. It's the coolest thing ever. And that was 6 years ago. And here we are today, needing to hire someone because we're growing. I mean, that's the best problem you could possibly have.
Yeah, that is actually very interesting because it's actually all true. Because right now, just speaking of right before the show, when I was checking out your profile, all the recent tweets, you actually have just broken 100,000 followers a couple minutes ago. Right?
Yeah,
it's isn't that insane? Congratulations, big congrats on that.
Thank you. I really appreciate that. Today's a cool day. Hitting 100,000 followers for literally telling terrible jokes and posting memes.
That's what drives this market.
Yeah, if you can dream it, you can achieve it. Look, many years of trying to figure out, what your audience wants or what audience you're going to adapt. Honestly, I figured it out. COVID, I joked in that post, like this was therapy for me. It really was. Like I was unable to see, and I believe in mental health and everyone should have a therapist. I think it's just good for everyone. And I was unable to see my therapist due to lockdown, over a year ago. And the only way I knew how to really cope with how difficult things became, basically trapped at home with 2 kids, no daycare, a working spouse, you're running a practice. I mean, it was nuts to say the least. Been preparing for stuff like this all the way back again. So here's the callback, full circle. Remember how I said I was grateful to come up to New York during 08 and 09 and drink out of the fire hose. It was never lost on me for the 11 years thereafter that I would need to be preparing myself, clients, business, and everyone to deal with something similar to that. You hope that never happens, but I think it's very unrealistic to think that you won't have another event. You don't know what the event is, but there'll be something. This happened to have been, a health emergency globally,
Yeah.
But here it is, here it is once again. So anyways, I used social media as a way to really just cope with what was going on. And it was humor and jokes. People literally needed to laugh. You walk a fine line there, but I figured it out.
Yeah, that is actually just fun, even funnier because I was listening to your podcast with Anthony Pompliano the other day with Pomp.
Yeah,
and you guys aligned well. But what is the fun is out of is all is how we as the millennials or how we as the crypto traders right now, we kind of like approach this entire crypto Twitter space, this CT, this community is a one big meme. There is not a single doubt about that. Like Dogecoin, all those Shiba Inu coins, all of those shit coins just pumping just for the sake of the pump, if you know what I mean. Isn't that insane?
It is. And to give like my real take on it, let's get into the crypto stuff because this is primarily about crypto. My views have certainly shifted, and I wouldn't say shifted, but more or less have matured over the years. I've never been anti-crypto. I had a great experience with it. So my crypto story is a friend, and I've written about this, really smart friend of mine, someone I love dearly, called me up right after getting married in 2014. I got married in 2013. So he called me up, later on in 2014 and started going off about, hashing and Bitcoin and miners and, language I hadn't really heard about. And all I could tell is my buddy was, but I knew I would always know when someone's calling and asking for money. So I said, all right, what is it? What do you want? And it was, I want $3,000. I'll put in $3,000. We'll go buy a 2 terahash miner that they're building down here in Austin, Texas. and we're going to go mine some Bitcoins, and I'll explain to you what this all is. And I got my first lesson in, digital currency and really Bitcoin and blockchain. And I went to go visit him in Texas and, get a more formal lesson. And it was very nuanced, and he's smart. And half the time I talk to him, I can't really understand what he's saying on a normal day, not having to do. It's a neurobiologist. So you can only imagine where his brain is literally at, pun intended. And it was funny, on eBay, that miner was selling for $10,000, and we had rights to pick one up for $6,000. So I'm like, just sell our rights on eBay. We'll make $4,000, and then we'll just go buy Bitcoin with it, easy peasy. That's it. We got a derivative here. Let's go do it. And he's like, no, he really wanted to mine it. Like, he really just wanted to do that. And he's like, you're the limited partner, I'm the general partner. Shut up. You take a back seat. And basically he mined Bitcoin until the miner was obsolete and its hashing power was no good. I think that lasted 6 months. And without disclosing it, we both, got a nice fair share of Bitcoin out of that. Put it in a digital wallet. I literally forgot about it for the next 3 years for the most part. I mean,
best decision ever.
Yeah, 2014 and then 2017, Christmas, right? End of the year happens. Now everyone and your mother knows what Bitcoin is. And here I am like, oh yeah, let me pull up my digital wallet. I'm like, holy, show my wife, like, this is probably the best investment of our lifetime, wild. And still decided to do nothing, didn't sell, kept, hodling here. Watched, went through the drawdown of 2018 and the flatitude of 19, and now here we are.
Exactly.
Added on some things here and there, but nothing compared to where we were. It's you can never fully escape the FOMO. It's like, why don't I have more Ethereum? But with that being said, that's my background on it, and I got to learn a ton by suffering through God knows how many 40+% drawdowns, a couple 80+% drawdowns. It's almost like countless number of Bitcoin classes on social media, the indoctrination of crypto Twitter, all the good, the bad, and the ugly. And honestly, you could say that about any asset class, although I don't think anyone's quite the spectacle as crypto can be. So out on the fringes. So where I've kind of arrived now is like, I'll soften the language. I don't necessarily I don't like anyone who is dismissing cryptocurrency at face value and at this point still calling it a scam or this, that. And I'm mainly talking about maybe Bitcoin and Ethereum. I think there are tons of scam coins out there. I think, of course. I honestly, so here are my hot takes. There's a lot going on in crypto that are not, a lot of things going on in crypto that's not good for crypto in terms of it long term. It's a distraction. I think Dogecoin is a good representation of that. And I know I don't mean to offend the very awesome, robust community of Dogecoin enthusiasts out there. You guys know how to party for sure, but I think you all would, you got to self-own this here. Your leader Elon basically telling you what it is on Weekend Update on SNL. It's a hustle. I get it. I hope the love for the meme and the Doge, sort of can actually keep this thing where you guys want it to be. Otherwise, there's going to be a lot of upset people because there's going to be a lot of money lost. So I don't want anyone to lose money in that category. So for all the people still calling Bitcoin a scam, I think you're on the wrong side there. Just take a minute to learn more about it. And then sorry, go on.
No, okay. Very deep. I was actually referring to the fact that there are so many scams. There are so many scams, but also to be able to filter out all this trash away from those gems, those beautiful gems, those fundamental gems, like Bitcoin is, like Ethereum is, like all the other, let's say, investments of your take are. I really want to move very quickly to the main merit. Yes, the main merit actually is on how your clients incorporate crypto in their portfolios and their finance. Could you tell me a little bit more about that?
Yeah, so it's very frustrating to be a pro or a supporter of cryptocurrency, if not an enthusiast and someone who holds crypto, and also be an investment advisor right now. Because and where the frustration lies is a number of ways. This is something I really wish I could solicit and incorporate into risk-adjusted portfolios for all the right reasons, to diversify, to provide opportunity, to generate alpha, to fight inflation. I mean, there's a number of qualities that, anytime you look at whether it's, a Grayscale or On-Ramp putting out pieces about what one up to 5%, incorporation of Bitcoin would do to a standard 80-20 portfolio or any risk-adjusted portfolio. I mean, the numbers kind of speak for themselves. Like, yeah, you would have added volatility, but not relative to the rest of the portfolio, you could have handled it and you would have generated asymmetrical alpha, had you done it. I work with young clients who are, going out on their own and doing this anyways. It's kind of a no-brainer. Yet, the rules aren't clear and the risks aren't worth it to be an operator of an investment advisory of my size, and put 1 to 5% allocation into a client's portfolio. There's no effective way to do this, and to get flack from the Bitcoin community, mainly maximalists who are taking a zealot-like approach to Bitcoin. I feel you. I get it. This thing is super cool, but this is a $90 million firm, which isn't that honestly, which is small compared to what's out there. You gotta work with me here. Put yourself in my shoes and understand, like, I'm not going to be the example for SEC and FINRA, when they do their annual audit and say, so, you've been soliciting Bitcoin to clients and recommending it. That might be okay. Let's go look at all the systems, procedures, operations, insurance, and everything that needs to be in place in order to get I don't even know what the thumbs up is from them. It's not like they have a one-pager, outlining, hi, investment advisor, here's how, here's how the regulators want you to sell this. And you're out of your mind to think, I'm going to be the one to do that. And it's painful when clients want it, when there's a demand for it, when you believe in it, right? So what you can do, and what I do find myself doing, is educating. You don't solicit, you educate. I think more times than not, my clients, by virtue of the demographic that I serve, are coming to me already owning crypto, or if they want to learn more about it, I'm happy to educate them. You can tell them how it works. You can point them to the resources. You can be objective with your thoughts and feelings. I can tell them I own it and give them my story around it. But, you have to walk right up to that line and saying, look, I can't put this in your account for you. I can't tell you, as part of your allocation, you should allocate X, go onto Coinbase and get that done. Very frustrating, which is why I'm all for a Bitcoin and even an Ethereum ETF. I know that's going to bring a new host of, problems or issues. Certainly there are many in the community that would prefer not to see that. I get it, but if you're in my shoes and you want to provide this as an offering, yeah, I mean, how is an ETF not the wink to the investment advisor from the regulators? This is why it's taking so long, that, okay, we give this our blessing, right? And a lot of that, again, has to do with the underpinnings. Is there a qualified custodian? What's the security risks? All of these things regulators want to know. So I just ask for patience from real enthusiasts and fans. There's a real negative vibe towards financial advisors in crypto. And I get it. Most financial advisors are the classic boomer, 60-something-year-old, selling, mutual, for all the stereotypes. I deal with it every day. But again, for those of us critically thinking about this, and really trying to figure out a way to get this in there, I love seeing infrastructure being built. I love seeing, 9 applications for a Bitcoin ETF. I think this is all good for crypto, and I think this is all good for Bitcoin specifically. This if you're a Bitcoin investor, these are the things you want to see. Not just balance sheets being converted, but also retail access will be a massive driver. And when and until such time as it becomes, it's great. I'll also say, like, it didn't seem so easy necessarily to tell a layman a newbie or wannabe, buyer of crypto to go onto an exchange they've never, they know brokerage accounts, they know Vanguard, they know E-Trade, they know Schwab, right? And you're like, well, this is no different over there. It's still new. It's still a barrier to entry. So by removing some of those barriers and giving, and that's where your Cash Apps and PayPals come into play. Like that's as easy as it could. So props to Cash App. You get a digital wallet and you can literally just, click buy, Bitcoin. That's as easy as it is. Easy as it is. Coinbase is not hard, right? Filling out an application with, and that's where, your grayscales and trusts come into place. Fill out an application. You can be in it. You can invest. That's why they've absorbed so much in assets. So again, a very frustrating thing because you don't want to miss it. I don't think you've missed I think it's still early innings for Bitcoin and crypto in general. But when you're me sitting at my desk trying to find ways to make this easier for your clients and go beyond education, it's frustrating.
I get it. I mean, I understand. There is an overall, let's say, barrier, right?
Yeah.
That just separates people against investing directly. But let's say I'm actually very curious to hear, because there are, aside from the financial planning for the services that you have, it's a millennial investing as well. And there is passive or passive active approach, I believe, that you can choose from with the risk-adjusted models. But I'm actually very interested. Is it like a very straightforward exposure that you're gaining with spot investments or ETFs, or is it mainly focused on hedging or speculation? How does it look really?
So in my practice, how are we investing? Yeah,
yes.
I mean, it's super vanilla. I'm never going to be the guy out there saying, certainly not saying, look at my track record, I'm beating, this benchmark by, so many points. Whereas, if you're going to compare it to a Betterment or a Wealthfront or any risk-adjusted passive portfolio, that's our core model. I do believe that most clients, when investing for the long term, should, it's more important to stay in, be disciplined, and stick to a model that you believe in more than just about anything else. Like, you can have your own preferences. You want to be 100% domestic and cut out international, fine. We can adjust the model to do that. You don't want value, not a problem. We can remove, we can just focus on growth. We can do those things and still do them in a passive, low cost way, right? And take care of it for our client. The main value, in my opinion, for clients who invest their money with the firm, first of all, the biggest value driver is financial planning. Always will be, probably will never be taken away from, any service out there. You need a human for that. But over on the investment management side, yeah, you have the commoditization of this, certainly when it comes to risk-adjusted models. Most of my clients, lucky for me, they are super busy people who literally don't want to take the time to do this. They're outsourcing it in their lives. And I think what a lot of do-it-yourselfers fail to understand, the FIRE movement or your Bogleheads who are like, why would you ever pay a financial advisor 1% to do something Betterment and Wealthfront, or you could, if you want to pay a smaller fee, or you could literally do yourself through Vanguard or Schwab or Fidelity. And I'm not denying that it can't be done. I'm literally trying to tell them what you guys fail to understand is they don't want to do it. Like, value is subjective. Their time is worth more. They want to marry their investment management with their financial planning and call it a day and have someone in their corner, their sounding board, their advisor. There's a market, guys, guess what? There's a market for that, a pretty big market for that as well, enough for financial advisors to continue doing it. And will it change? Of course it will. I think where people get upset is when advisors or wealth managers, don't just say the truth about what it is. I gave you the truth right there. That's the truth. You can't argue with me. You can't force someone to do something that they don't want to do. So you'll lose this argument if you try and fight that. But if I'm out there saying this is better because I can outperform, then you're probably going to meet some resistance on that one. So the vast majority of client money finds itself into these diversified core portfolios that are passive. Now, outside of that, as you scale your wealth and can have a higher risk budget and appetite to go explore alts, you can begin to incorporate whether, look, and now you're getting individualized, investment strategies depending on the client. I got folks who have the majority of their money in real estate. These are, your real estate bugs, if that's even a thing. They believe in hard assets. I have folks that love commodities like you and really want, metals or in this case, Bitcoin to be a significant portion of their portfolio. I got folks who really believe in their company and they're loaded up on their own company stock because it's their company sometimes, right? So you can't really cast too broad of a net when you start drilling down in the 10, 15, or 20% of people's on average investable assets that are not those core assets. It's both. It's usually not one or the other. But when we start getting into that, let's call it satellite to the core, that's where you'll start seeing crypto. That's where. So they'll come to me. So back to the topic here. Client comes in, hey, Doug, I turned $50,000 investment in Ethereum into $400,000. All of a sudden, my investable net worth went from being.
Can you pump it for me, right?
Yeah. Maybe they can pump it for me. How do I all of a sudden 10% of my investable net worth is 50% of my net worth? What does this look like from a risk standpoint? What does this look like from a tax planning standpoint? How do we navigate that? So now you can easily see how a decision to invest, a client's decision to invest in crypto transitions into a full-on financial planning discussion that then weaves back into the planning we did for them. So screaming Bitcoin fixes this or Bitcoin solves this all day long does nothing for actually addressing real financial issues and concerns and planning topics that investors should have. Now I get it, hold it to the moon, rocket ship, you'll deal with it later. Fine, but that's fun for the meme and the pump, right? I get it, cool. But if here's the last thing I'll say here is, I wish we had struck a better balance of the fun that we have with it and rocket ships and diamond hands and all of that, with this still being part of the greater financial world, which deserves a level of seriousness, because it is serious. It's real money. People are shaping their lives around it, and hopefully you're changing your life around it. And if you are, you're going to have these questions. Like, I think to myself sometimes, shouting all these fun things like, does this person got a couple kids at home and a spouse, and a job and responsibilities? Because if you do, then let's
serious.
Of course it's serious. You're really planning your life and your kids' education and paying bills and all of this stuff.
I've heard so many stories, so many people just DM me, of course. I assume that's the case as well for you, but that they just took out so many loans because they were like under the water, they needed the margin for the collateral.
Dude, right? I tweeted like 6 months ago, I shouldn't have to say this, but don't use your student loans to buy Bitcoin. And I knew what was going to happen in saying that. And it was just like, shy of getting ratio, like I knew I'd probably get close to getting ratioed on that, but it blew, it was a good tweet, it blew up, but some of the response, I'm just like, oh my god, like there are people, like way too many people actually saying you should have done that with hindsight bias. And I get it. I'll provide you the cautionary tale of how that goes horribly wrong.
Yeah, what I also know, kind of like just is new to many people. This is a novel. The risk management part is a complete novel. It's new. It's like it's something they never consider. For most of the traders, majority of these meme traders. But what I kind of like notice is that the moment that you add to this entire profitability thing, the fact of this profitability being risk adjusted, if you add the risk management layer to that, that's when it becomes serious. That's when you start quantifying things.
The focus, look, and again, props to Michael Sonnenschein and Grayscale and the institutions that are creating this. I'm sure if you ask Michael Saylor to produce, actual data, I'm sure he has it at his fingertips, and they have many PDFs and white pages going around, MicroStrategy. I'm sure if you ask any reputable shop, I mean, the business side of it, ask any fund with billions of dollars. You think this is a joke to them? Like they'll use those components to market, but oh my God, I've never met a group of smarter people than the folks who, the OGs of this space who've been saying this forever and showing the information and showing the data and showing the risk statistics. More of that. Like you can, again, here I am with an opportunity to say you can have all of this fun, right? But also represent Bitcoin and crypto in a way that's good for good for the ecosystem. And I also at one point had an issue with the have fun staying poor. That is not a way to get people to come in. That's not a way to get people to come in. If your goal, I would assume anyone holding Bitcoin's goal is to see Bitcoin go to 100, 200, 300, a million to the sky. That's what even the maximalists, that's what they want. I mean, they want destruction of the US dollar half the time. I won't go, I don't like that, but for anyone who wants to see it literally go to the moon, well, then I would argue, don't you want to bring in any religion in the world that wanted to bring people into it, had better success showing the positive things and the good things that came out of it. And yes, I am making the connection between a religion and Bitcoin half the time, but none of them were like, screw this guy over here. Like, no, they want you in there. They need numbers. They need the army. They need that. And I think if you're going to play a numbers game, you're going to win more. As they say, you get more flies with honey than you do vinegar. So I don't really understand that.
Yeah. Well, I guess. I mean, I cannot just get that out of my head. For the have fun staying poor. Jesus, that is so meme. This community is such a big meme. But still, what matters is not that for us to quantify the risks and to be able to plan the trade, plan the investments. We have to apply the set and analytics. We have to apply in this very context for any long-term views. It's what we use, that is the fundamental analysis. So I want to talk very quick about the modern perspectives, modern views, modern ways to apply the fundamental analysis while incorporating crypto into portfolios.
Yeah. So luckily there are great financial writers and great institutions that are doing God's work here when it comes to getting that data out there. My friend Nick Machuli of Dollars and Data has written many times here on Bitcoin, and there's one post he had maybe back in 2019 that showed the risk statistics of incorporating Bitcoin in a portfolio and how it would have fared. Again, Grayscale has that in their brochures. But where it really needs to get to is even higher up than just individual writers and great bloggers and product manufacturers. It needs to really get into the research organizations and the data feeds of charting software, which by the way, some have already done that. And it's great to see that there, to be able to look at those drawdown charts, to be able to look at correlations between various cryptocurrencies.
You have any specific names in mind for the charting software?
Y Charts does a good job with that data. I'll give a shout out to them on that. But I would love to be able to, and I haven't checked in a while. I'm curious as to whether or not I could pull up Morningstar Advisor Workstation and add Bitcoin in there and incorporate. I mean, that would be a very powerful tool to show an allocation of Bitcoin in any portfolio that you'd want to construct with any, virtually every security available on the market. Then you can start really, putting things in front of people and clients and making compelling arguments and building out investment models around, Bitcoin and crypto and Ethereum and stuff like that. But these are the baby steps that we're taking. You still need infrastructure. You have my really good friend Tyrone Ross as the CEO of OnRamp, and shout out to him because he's trying to put square pegs in round holes by connecting digital wallets to legacy custodians. So for me, the investment advisor who's trying to have the data of their client's digital wallet on a read-only basis show up as a line in their brokerage account, so I can run performance reports, so I can run allocation summaries, so I can basically have it part of my tech stack as an advisor. Please give me these tools, and we're going to need these tools in order to effectively incorporate cryptocurrency into our practices. I'm a young guy with all the greatest tech out there, and this is the cutting edge of the investment world, and we're getting there. And again, trying to keep that FOMO at bay. I mean, how many pro investment advisors would lose their minds if like Bitcoin goes parabolic even more? And great, now we're at $150,000, and I'm just getting access to, it's gonna be a pain point for the believers, or the ones who have been looking at this data and feeling like this is a good place for clients to be, and now for the billionth time have missed another big opportunity in. And again, that goes back to I think that's really at the heart of the frustration here, when it comes to investment advisors and crypto, and mainly Bitcoin.
Okay, but for the fundamental analysis alone, or for let's say there is this ratio analysis, right? That it pretty much like compare the relative strength of some certain stocks groups, and in general, does it apply in a similar manner, in your opinion, to crypto? Is that something that you actually use?
Yeah, I don't see why you can't apply that same analysis you do for stocks and creating portfolios and incorporate crypto into it. I think that I see a future where it's part and parcel of risk adjusted portfolios, right? Like I want that. Like I want that. Maybe it starts out as telling clients, here's our core portfolio. Here's core portfolio. Here's how, very much on the marketing side. I like that side. Well, what's core portfolio plus? Oh, this is a layer of crypto for clients that want this. You want to go, what would you like? Straight up risk adjusted, or, the plus being a crypto layer? Well, what's that? Sure. For our most aggressive portfolios, it's 5 to 10% allocation to Bitcoin using, the most appropriate product for clients. Still a fiduciary. You got to look out for them and figure out what's going to be best.
Most appropriate product means 100x leverage, I'm sure.
Yeah. So the 10x leveraged, Bitcoin ETF.
Let's go.
That's the one. That's the one for everyone. But whether you choose, so that's the plus model. But in all seriousness, that's something I could see in the not so distant future. Just need the tools to do it. So I don't think the analysis is really any different. The more Bitcoin and the more legacy crypto exists, the more data that's out there, the more analysis that can be done. So it's only going to get better. The data sets are only going to get more robust, and the arguments are only going to be more compelling. That's my bet.
Okay, I'm personally much more of a technical trader, of a technical analyst.
Yeah, you like them charts.
Yeah, I like them charts. I'm actually on my final path to the CMT, designation.
Good for you, man. That's a massive one. Good for you.
That is pretty good, And ever since I started pretty much like this entire journey with them, I definitely see a lot of improvements, and this holistic understanding for how I see that all the markets and all the dots connect. It's of course still lots of work to be done on my end, but I also want to ask, and just kind of like out of my own curiosity, if technical analysis for the cryptocurrencies is anything of your interest. Is it anything that you apply?
Don't hate me. No, charts and I have a distant relationship with one another. I look at a lot of this. Yeah, I look at a lot of this stuff, and I'm just like, what am I looking at here? I'm like, this line looks nice, and I know I'm a clown when it comes to the charts, but I've been sat down by friends, by CMTs, and say, come on, let me show you some stuff. Let me show you something cool. And I don't know, maybe it's my ADD and I just can't sit there long enough and pay attention close enough. But I don't see why, you couldn't take the discipline and seriousness of market technicians and technical analysts when it comes to stocks and not apply that to cryptocurrencies. I still think there's probably only so many cryptocurrencies with enough volume and enough, history to really make meaningful charts out of. With my limited knowledge of technical analysis, that would be my best thought. But we'll see how many altcoins or shitcoins survive. There are ones out there. Look, you look at a Polkadot, which has a lot of really smart people behind it who've had previous success. Hey, you can follow that and see where that's going to go. Shiba coin, maybe not so much. But Shy of offending that community. Sorry, guys.
Yeah. There's in this modern world, there is not a side that you could just flip towards that you could not offend anybody. So no offense taken to anybody for sure.
Everyone get offended.
People are getting offended nowadays.
Yeah.
But there is nothing bad. Definitely not a single piece of anything bad that you don't personally apply technical analysis. I know whatever works. I know people who trade based on astrology. So there's literally anything that you can pull. You can if you were a coin flipper.
We had Dave Portnoy pulling tiles out of a Scrabble bag a year ago. So
exactly.
Hey, now.
Exactly. Right. I love that. And it's still the main conclusion that it's still one big meme, because it takes one tweet from Elon Musk to just pump the entire market apparently. So that is definitely building the strong allies is what we want. And this is, I think, a very good time to remind to everybody to make sure you subscribe, put your thumbs up, and leave a comment if you appreciate what we do for you within the Free Trading Congress, and if you appreciate what Douglas Boneparth, an amazing guest, has been sharing with you for the entire session so far. And before we proceed to close this very session, I want to kindly remind to everybody so that you go to the video description on our YouTube, and there is a giveaway link, and you can win that free membership, free subscription for the Birb Nest community, for the exclusive product. So make sure you go and follow up on that. And before we disconnect, Douglas, I really want to take this opportunity and leave some of our viewers with the final thought from you. What is the main one takeaway suggestion that you will want to leave our listeners with?
Yeah, my father always said, as financial advisors, and even as, people, when we navigate life, you usually have a much smoother ride when you float down the middle of the river and you're not crashing into the rocks on the shore. And that has so many applications, whether you're talking about volatility, whether you're talking about how you market something, or how you behave as a person. And inherently crypto is a volatile space relative to other asset classes, and even the volatility and how people talk about it and behave around it. And again, just from life experience and from growing up in the profession that I am in, there's a smoother ride for everyone by being more balanced and more even keeled in the middle. And again, I love the memes. I mean, geez, I got to 100,000 followers by making jokes and using memes. It's powerful stuff. It's truly a psychological experiment there. But be good to everyone. If you're really into this stuff and you want to share it with other people, do it in a way that's good for both that person, the community, and yourself. Balance. Have fun. Also be serious. Balance it all, and you'll be good.
That is what we are definitely lacking yet. We are maturing as a community, but there's so much toxicity.
It'll take time. It's the early exciting days, of the information era here. So, let's just strive to get towards the middle, and everyone will be just fine.
That is one of the most beautiful closings I have ever heard, probably. Ladies and gentlemen, there are so many positive and beautiful comments appreciating Douglas Boneparth sharing his knowledge and experience. I definitely want to thank and appreciate on behalf of my own and on behalf of the entire Birb Nest community. And thank you, Douglas, for being part of our amazing Congress and for spending this last hour with you. Thank you for that.
You're welcome.
Amazing. That's all for today, folks. Let's make sure to put your thumbs up, put comments before we disconnect, and subscribe to stay notified for the upcoming sessions. Ladies and gentlemen, it was Crypto Birb Adrian speaking. Thanks for everything. See you soon. Bye.